What's up, folks? So listen, one of the most popular tools for traders is the Fibonacci retracement. When it comes to technicals, it is one of the most elite tools when trying to understand when a correction for a trending market is going to be over to proceed to the continuation of that move. And in this video, you're going to learn exactly how to use Fibonacci and how to take your profits to the next level. Let's go. Welcome back to the channel, guys, and we are on the charts right now and we are checking out the NASDAQ chart, and we're going to talk all about the Fibonacci retracement tool. Now, first and foremost, what is the Fibonacci retracement tool and why is it useful in the first place? Well, basically what the Fib retracement tool allows you to do is take 2 points on a chart, usually being the high and the low of a particular move, and it allows you to measure the possible areas of retracement of that move before the continuation happens. Now, that being said, there are a couple of key numbers when it comes to Fibonacci, and as you can see right over here, those numbers are the 23.6, the 38.2, the 50%, 61.8, 78.6, 88.6, and then finally you get to 100%, and so on and so forth. But these are the key numbers and key areas that we look to see if price is settling at that area and if we could possibly get that reversal from that area. Now, we're going to learn exactly how we should be using this Fib tool. Unfortunately, a lot of times traders use it the complete wrong way, but no fear at all. We're going to learn the right way to use it right now. So what I want to do is identify a trend and 2 points within a trend. Let's go to the very start of this uptrend over here as far as NASDAQ is concerned. So this particular area right over here is going to be the low point of this move. The move that I'm talking about is the initial impulsive move to this upside. So this big move to the upside, that's the move we're looking at here, okay? So this is the low point of that move, and up here is the high point of that move. And why that's important is because those two areas are going to dictate where I place my Fib retracement tool. Okay, so the next thing I want to do is get my Fib retracement tool, and I want to measure from the low point, right, exactly where this ellipse is at, from the low point, and that's my first click, all the way to the high point of the move right here. Okay, I want to extend this a little bit just because I know that it may take time for the correction to complete. So I want to extend this out so there's plenty of room so it's very clear on my chart. All right, but either way, the level at which I'm going to stop this Fib tool is going to be the high point right over here. Okay, so I'm going to extend it, but I still stop it at the high point right over here. Now, the next thing we want to do is very important, right? There are a couple of things. First and foremost, we want to identify where price retraced to, right? Where did price retrace to and where did it start to settle? And as we are looking at the chart over here, what we're seeing is that price came down, right? After getting to this high point, price came down very sharply, however, started to consolidate right here at the 38.2 area. Right over here, this 38.2 area, this is where price started to consolidate, and it settled all around this area. Now, one of the mistakes that traders make a lot of times is that they tend to look towards one of the numbers and pretty much want price to hit one of those numbers. One of them being the 61.8, which is known as the golden ratio, right? And because you're anticipating price to hit that number, you completely ignore what price action is actually telling you. Right? Price action is actually telling you that I'm actually creating an area of support over here. And that brings us to one of the key ways to use the Fib retracement. Whenever I'm in an up move or a down move, let's say I'm in an up move, right? So this is an up move, big move to the upside, right? Then I get my retracement back to the downside. What I want to see in the retracement is where is the area of support being created. That is very important. That is what I'm looking for. So within Fibonacci, I'm also looking for support and resistance, right? Depending on which direction I'm going, of course, but I'm actually looking for support and resistance. So if I'm looking for the retracement to come to the downside, I'm looking to see where is that support forming, because that is going to give me the idea of where this potential reversal can actually happen. That support in this particular case formed at the 38.2 area. Okay, now being that I see consistent support at the 38.2 area, there are too many areas to highlight, right? That this is an area where it's settled. This is another area. We see that it's not budging. It's not going any lower. It's not closing any lower. It is in that area. So at any point over here, we could have entered our trade to take the buy. Now, would we have to be a little patient? We probably would have to be a little patient, because this entire move, from the time that it was clear to us that price had settled at this area of support, this entire thing started to take, let's see, about 11 hours, 12 hours here, right? So it would have taken time for the move to actually take off. But you have to ask yourself this question. Well, regardless of the amount of time that the move is taking, is the setup still valid? And if the answer is yes, then you continue to stick to that analysis. You continue to stick to that setup, and you wait, you set alerts, whatever you have to do, you wait until that setup is ready to take off, and you take your profits from that setup. But pretty much like I'm saying, I would take my entry at any point here, right? And yes, I would have to wait, but I'd take my entry at any point here. My stop loss, I would prefer to put my stop loss possibly at the very next level, right? So price is settling at the 38.2. I'd like to put my stop loss maybe even a little more than the 50%, right? If it could be less, that would be great, because this is NASDAQ. Let's not forget, this is an indice. The stop losses are higher than usual, but the pair is also more volatile than the usual pair anyway. So that being said, I'm going to take my buy here, and then I'm going to set my TP right over here. Why would I set my TP over here? Again, incorporating support and resistance. Just look to the left. If you look to the left, what do you see here? Price came all the way up here before it found an area of support, right? Price came all the way up here. So to be safe, I'm going to just take my profit right at that area. And that's how I would execute on this trade. And if you measure from here, right, and you barely incurred any drawdown, barely, right? But this whole move was a 170 pip move. Very, very simple move, but 170 pips. And here's the beautiful thing. If the market is trending, you can keep this up. You can keep going and go on to the next level. So obviously you get your continuation here. And let me just remove some of this stuff so it's clear. So obviously you get your continuation right over here. And what we want to do is, once that continuation is finished, now we want to measure the next area. So I'm going to again identify the low point and the high point of this particular move, right? So the low point is over here, right over here, and the highest point that it got to, we can say here, but it got just a little higher. So let's just say this area right over here, right? This area over here was the highest point that it got to, right? So we're going to now use our fib retracement tool, and with these two areas, we're going to use that so that we can put our points accordingly, right? So from here, from the bottom all the way up here, and I'm going to extend this across so that it's clear, right? And let's leave our fib tool right here. And what do we see? Right? So we see that price started settling at the 23.6. So price came and gave an initial retracement to 23.6, and then it edged a little higher. But what did it do? It came right back towards the 23.6 area, right? Especially towards the very end of this correction, came right back to the 23.6 area and found this area of what? This area of support. This area of support. Now, another key thing to note, this is going a little deeper when it comes to these fib levels. If you see that a move retraces to the 23.6 and then continues going, it's usually a sign of a very strong trend, right? The trend is very, very strong. There's very, very little retracement that it needs to keep going. Versus when the retracement comes back to like the 61.8, 78.6, right? 88.6, not the strongest trend in the world, right? But if it retraces at the 23.6 and continues to go, you know there's a pretty strong trend, all right? And it wants to continue going up. There's potential for a big continuation here. So we settle at the 23.6. We see our area of support. Again, this is nothing but support and resistance over here. We see our area of support. Let me give you another confluence that you can even add to this, right? That some people may not even notice. So this was an area of support, obviously, but we also have somewhat of an area of resistance over here, right? We have an area of resistance over here. So that being said, not only am I paying attention to my Fibonacci, and my Fibonacci probably gives me the best entry possible, right? But if I want extra confirmation to maybe stack in my trades, or maybe I just want to be a little reserved and I just want to wait till I get that extra confirmation that the move is really going to go off, then you can actually even wait till we break this area of resistance, right? In this candle over here, when it's really clear that we broke this area of resistance on this candle right over here, and then entered my trade, even though it was late, but I know I have that added confluence of the break of structure, right? The break of resistance on top of the push off the 23.6 on the Fibonacci area. Many ways to play this, but either way, the direction is the same. The direction is leading us upwards, right? So I take my trade. Like I said, it depends on you. You can trust the Fibonacci and that could be your ultimate confluence, or you can wait for a break of structure here and maybe that is your confluence. And even if you took that here and you entered that trade, and let's say you put your stop loss below the previous low right over here, then you have quite a move on your hands, riding it up to the next area of support. The next area of support is all the way up here, and that is quite a move on your hands. Over 100 pips over here. So this whole move, the entire time it took for this whole move to form was only an hour and 15 minutes. Hour and 15 minutes to make over 100 pips. That is quite a good deal. And the beautiful thing is you can keep this going. So now you have your next area, right? And your low point again is going to be that 23.6 that it jumped off of. And your high point now is going to be this particular area right up here. And again, I'm bringing my fib retracement tool. I'm going to do the same things, repeat the same process over and over and over. And what do I see? What am I identifying? I'm identifying again another area, yet another area of support, right? This area of support covers mainly the 50% area, right? Did it edge a little lower than the 50%? It did. It got towards the 61.8 in the beginning, but as the move progressed, we see that it really settled around the 50% area, and we could have taken our entry at any point over here and again capitalized on the continuation of the move to the upside, right? This one was a little bit choppier, but this would have still been a very profitable move to the upside. Taking this from here to here, still would have seen 50 pips before you got quite the retracement. I don't think this would have taken out a stop loss, but either way, you would have gotten all the way up here around 90 pips, around 80, 90 pips. So pretty good move right over here. All right, so this is the power of Fibonacci over here. A very powerful tool when it comes down to your technical analysis. And on the other side, we can keep that going, right? Now you get a big move to the downside right over here, big impulsive move to the downside. Well, let's add Fibonacci. We see it retracing. Let's see where we can capitalize on the continuation of the move. I'll take my fib tool from point A to point B, right? Extend it across point A to point B. And then what do I identify? What do I see? Before, when I was looking at the up moves, I was looking for support because that's where the retracement was trying to find support. Now, because this is a down move, I'm looking for resistance, right? So that being said, I'm looking to see where price started to settle, and that resistance we see is clearly forming at the 50% area. We see that very clearly, many touches around the 50% area, right? Touch over here. We get another touch right over here, and finally we get a touch over here. At any point we enter the move, there might have been two opportunities pretty much to take a move over here. There might have been an opportunity to take a move right here, right over here. This might have been one opportunity, and you could have definitely capitalized on the move. How do I know this would have hit my TP to the T? Let me show you, right? So I'm gonna put my stop loss above resistance, obviously, right? And my TP, if my stop loss is going to be above resistance, then for my TP, I'm looking for some area of support, right? If it's there, but I'm looking for some area of support. Well, if I look to my left, what do I see? I'm seeing this area of support over here. This is an area of support right over here. So this right here, this is a clean move to the downside, and I definitely capitalize on this. And guess what? I make about 92 pips over here. And guess what? Price comes right back up to the same area price comes right back up to the same area, shows that it still respects this 50% area, and I can get in once again, right? I get in once again, same thing, same stop loss, same everything, and ride it down to the same TP, and then you just double up on your money just like that in a single day. That is a beautiful move if you ask me. If you want, you could keep a runner going, because obviously you're looking for a continuation. You could have kept the runner going, but either way, we see the power of this tool, how much it works. Not only did I cash the continuation to the downside once, but also twice. And I can keep this going so long as the move continues to trend. All right, so very, very important. So when the market is trending, one of the best tools you can use is Fibonacci. Add that to your confluence belt, because it's a very, very powerful tool, and it allows you to see these things on the charts. Now, in order for you to even identify that a market is even trending, you need to understand the different types of market conditions anyway, right? Good thing I made a video about the different types of market conditions right over here, and you could definitely find what you're looking for in terms of understanding the different types of market conditions. But guys, take advantage of this tool. It could definitely transform your trading and get your profits to grow exponentially. So I appreciate you guys so much. Look, if you like this video, please like, share, and subscribe. It really means the world to me, and I'll continue to pour out some amazing content for you guys. Let's run it up, people. Peace.